Hi guys, once again this is Alfred from BinaryOptionsTutor.com. Back at it again. I'm going to try and explain this template. I'm going to put this template on the site for free and uh, put this template. A link to it should be in the comments. I just started my little. I just started my little timer because I can get verbose. I'm trying to be so thorough now, and I'm talking a lot about price action, so I think that's subjective, but I'm going to try and explain what's on this template as best I can. The crosswalk is not on this template. The crosswalk is a premium indicator that we've been selling for a long time on our site, but it's still a good template. All of these indicators are free, but most important, the indicators is not. You are going to have to be the biggest um, factor. So we're gonna talk about how the use of the tools, and that's all the indicators are. So I'm gonna start right here with these. I found these floating around, and they were exactly what I was looking for. These are Donchain channels, but they're only based on price. They have nothing to do with the length of time. Why do I use them? Why are they even on this chart? I got them set to 15 pips, which is basically about, if you get the statistics, and you can easily do that with the statistics on the bot and round it on the bot round and hold numbers indicator, and you can see how much whatever given market swings up and down on average for 30 days. Take those statistics and uh, add them together, the swing up, the swing down, and take you about a fourth to a third of it, and that's how I set these Donchain channels. The reason I do that is because, watch this. This is called scaling. This is not a conspiracy by the broker to make things way more subjective. It's just the way things work on computers. Okay, my brother, it'd be better to explain it, but essentially, right now, this doesn't look like a very big move, does it? Okay, if I move this out, because there's new data that has to be displayed, the scaling is going to change. Now I'm going to go back to the same place. Look, voila, it's a bigger move. Okay, the reason I have these on is to um stop things from subjectively looking like a big move and turn them to objectively looking like a respectable move. Because I know from here to here is always going to be 15 pips. Because I set it for 150, which is 150 points, or pipettes, what people used to call them back in the day. And that's 15 pips. So that's one thing. The Donchain channels. I have these Donchain channels set to 16. That's is a 15-minute chart, so that's what? 4 hours. Okay, so now I can look at the highs and I can look at the lows over 4 hours. Okay, I don't need multiple screens, multiple monitors. That all looks pretty and great to take pictures of yourself in front of and tell everybody what a big professional trader you are, but you have to be able to make decisions very quickly if you're going to trade binary to me. So I know where the 4 hours are. I know where we are relative to the 4 hours. I have these larger time frame candles. I know where we are inside of the 1 hour. I'm not changing from one chart to another. I'm overlaying all of these charts, the 4 hour, the 1 hour, and the 15-minute chart. So I can envision the bigger picture of what's happening on the market. Look, small count, small move up, small move down, small move down, small move down on the hour. 4 hours. Break. Break of this area here, and we just keep going up that next hour. That's a breakout trade. Congestion, choppiness, then all of a sudden we break above this hour, above this hourly close here, or you can wait for the wick. There's the wick. And if you're just purist trading price action, there you go. There's a breakout trade. What's happening? What does it look like it's happening now? You're on a chart with 4 hours, all you're going to see is 4 hour candles. But when you've got all of these overlaid, now what can you see happening? We're topping off. Looks like we're starting to top off here. The momentum to the upside looks to be drying up. Well, what else do we know? We know we had a really big move up. How do we know it's big? Because from here to here, it's 15 pips. Now, does it make sense why I've got everything so far on the chart? I hope so. Let me see how I'm doing here, because I can get verbose, but I'm really trying to put this in a short amount of time. Not long to go. Next, I have these channels. This isn't really channels. This is a moving average. This red line is set to 6 hours. This is the average. It's 24. It's a 15-minute chart. So it's 6 hours. This is the on average the high of 6 hours. If you go back 6 hours, this is the average high. If you go back 6 hours, this is the average low. Okay, why bother? If price is above the average high over 6 hours, who's having a better time, the buyers or the sellers? The buyers. If price is above the 6 hour average high, what's most likely happening with the algorithms, with the banks, with whatever, whoever you want to call it? What's most likely happening there? Those guys must be moving the market up. So first thing you're going to see is on average when we start moving above the 6 hour high, and when you start seeing your 1 hour candle painting up, and when you start seeing your 4 hour high breaking out, now is it making sense? Because you're seeing all of these things on one chart. You're trying to get the bigger picture. And everything I'm talking about for the purest price action guys is all price action. But price action is subjective. It's hard for some people to understand that I've been looking at candles for maybe about 20 years. You may not see the same thing I see if I just put a naked chart up here, but I'm trying to help someone who wants to be a purist to see it anyway. Okay? The reason I set these for 15 pips also is I want to see, look at this big move here. Okay? Either the move is going to top or the move is going to keep going. And I'm going to tell you, from a long time doing this, when you get in front of a 15 pip move like this, it wicked at the bottom. Okay, it topped for a while, but the easiest thing for it to do is to keep going, because there has to be someone. Okay, I'm never gonna make 9 minutes. I give. There has to be someone willing to sell. There has to be someone there that's scared. They're holding and they're willing to sell. Either they're willing to sell at a profit, or there's going to be a whole lot of people who are going to get taken out. Their stops are going to get taken out. So it keeps driving the market up. So you see big moves like this, take a pullback on these 15-minute candles, and it just keeps going. Okay? So And what cued you in? There's this. This is a wide, what some people call a wide range bar. We have an indicator on our site that's less subjective. It's free too. It's just called a Bigfoot indicator. It just helps you to spot really big bars. And so that who moves the market that much in that short period of time? News, banks, etc. Okay? So if the dog wag the tail don't wag the dog, even if the brokers try and push the market down this way and the banks really want the market to go up, what happens? The banks are going to win in the shorter time and the trend is going to continue to go up. Let's talk about something else here. And this is another thing that I do with these numbers because I'm always trying to figure just bigger picture, bigger picture, bigger picture. And where are the algos? Okay. 6 hours. What's happening here with the price action? This is the top of the 6 hour high and it's rejecting with a wick. There it goes again, rejecting with a wick. Here it goes again. Close there, pop right back up. When I see these closes, and you have to wait till the candle close and then observe what you're seeing. When this candle closes, this is going to be up. This is going to have wicks to the bottom and the hour is up. So what can we assume? The trend, and we're wicking at the highs. Price is wicking when we just hit the average high for the past 6 hours. So what must all of the algorithms out there be doing? What what are the banks doing with this giant candle here? Or what has the news, what emotion has evoked at least for a time in the market that hey, uh, something's got this baby going up. Okay, now there is going to come a point where the market has to stop. It can't keep going up forever. And now you start to see that reflected first when you see a wick and you start to see a downtrend, you start to see the next candle making lower highs and red candle here and it closed there. That's your first sign on 15 minutes. That's also a sign on 4 hours. You start painting this candle here. That's another sign on an hour. Okay. So that gives you the hey, the markets. Now I'm starting to see some shakedown in the trend. Okay. These hourly bodies are starting to top out here. There's a 15 pip mark for those who love to trade with Renko. What on earth is the difference if you just put these lines every 15 pips? That's why I made the bot round and whole numbers because I just don't like the look of Renkos. I can't see the time. I can't see what's happening in time there. But I can see everything here with a bigger picture. Okay? I know that sometimes the market likes to get caught in between one of these 15 pip moves and in between these Donchains that I'm setting for 4 hours. And that's where I start looking for at least temporary tops. And I need to see some wicks. And then I see them and I start believing it. And I start to see trading resuming below that 15 pip move. And the market starts painting itself down somewhere in here if I get involved. Okay, where's my stop? Somewhere up here. If I'm trading Forex, it better be somewhere above here. Okay, because I need room to breathe. And that's without a lot of complicated stuff. Just a very simple template. Now, I'm trading price action. And when we're in an uptrend, you're going to see rejections here at the high. Why? Because the market's trending up. Uh, this is Euro USD has been going down forever, it seems. We're caught in between. What you probably got? 6 hours, no decision either way on the just between the average high and the average low. So that's kind of congestion in the market. Chop. What do you see in this price action here? Up, down, up, down, up, down, up, up, down. Chop. See? You don't see anything until we break here. And then it breaks and breaks. And then you get caught in between this time-based Donchain channel and this price-based Donchain channel, which lets you know somewhere there's been a 15 pip move up in here. Okay? So I'm stuck there and I'm gonna wait for the market to pop back up and get back into that other area. I've seen guys trading like that just off of that premise, and it's some people call it zone trading, like under the premise that a market maker likes to trade in a zone, kind of have it like a square. So he sets out an area that he's gonna buy and sell within, and you can't hold the market in that area forever, so you have to move it to another zone so that you can capture orders at a different price range. And this just kind of makes it easier to see that there's a zone of market trading in that area. First thing happens, we start trading below that 6 hour low. See, we're wicking there. Now we're failing to even make it there. Now we've broken out of this 15 pip move. We're wicking there. Okay, and the Donchain channel would be expanding and expanding. You gotta wait till it stops. Okay, and now we see a wick and we start to pop. Okay, but when it's moved from here to here and then it's came down even more, what's the easiest thing for you to do rather than try and pick a bottom? Try and continue on the trend. That's the spot for you to get in. To if you're trend trading, that's the spot for you to get in and continue with the trend. Cause why? You still haven't accomplished the first thing, which is to break the 6 hour average low. Okay? Now, trend changes. Hourly candles started coming up. You start trading above that 15 pip move. Another hourly candle coming up. We hit this number. When I see the market reacting here, then I know I've tuned this pretty good. I've got a good number that the market's reacting to. Then we go down, we try and get back into that channel, and then we break that channel. Now I'm long until I start seeing wicks that say otherwise, and that would be that move right there. Uh, what is this? Not a lot, you know. Maybe if you was trading like that, maybe you could scalp. You know, this is the first sign of being long. This is the second sign. By here, you're way too late. But from there to there, that's like 20 pips. All we're doing is saying, well, the algos have obviously been pushing the market down. All of a sudden, for the first time, we're breaking out above the 6 hour highs. I'm going to take a chance and go long. Oh shit, the market's moving against me. Okay, wait, it wicked right at that same place. So there must be some algo out here that's pulling from this number. So we keep going and we get back up. Oh, but it's wicking at the top too. Okay, well, it's wicking almost at the same number. Okay, well, now it's made it here. You know, it seems like the run is over. You see how you could tell the run is over because one, two, that's a good move. One, two, that's not very much. One, two, that's a little more. The market and price is telling you. You just got to look at them. And it's easier with these color coded larger candles. Higher, higher, higher. If you're still here, and now we're breaking the high. So whatever got you in thinking, okay, the market's going long, it's over. We're breaking the high. What's left now? To break the low, to break the 15 pip move. What more do you need to see? And these are just guides to be used with price action. Guides, yeah, with price action. You got price action on your side. You got something to help you keep things from being so subjective. You know, maybe make it more objective. There's a big move. There's a big move back the other way. There's that topping pattern. There we go a little lower. There we go a little lower still. How, where we know we're going lower at? When we start to fail. See, we failed the 6 hour. We wit. We failed that 6 hour high. We're failing again. These are just things to think about while you're in the trade. While you're, oh, I'm gonna take a chance. I'm gonna get in here. Okay. I'm not sure, and you're never going to be sure. But I see these wicks up here. I'm gonna take a chance and get in here. Okay, we closed below the 6 hour average high. Now we're closing below the 6 hour average low. We're approaching that 15 pip predetermined spot. We hit it, we wicked right there. And hey, if this starts to break and go the other way, maybe you leave. So that's it. Way longer than I hoped for, but I'm trying to be thorough, talking about something that's very subjective. Um, just a free template. I'll post it up, and if anybody wants it, go ahead and download it. And see you guys on the next video. Once again, this is Alfred from BinaryOptionsTutor.com. Um, if we've helped you, please help us by sharing the content with others, and make sure to subscribe and like and comment and ring the bell and whatever else people are saying nowadays. See you guys on the next video. Bye.